All right, so continuing right along, we're going to look at, like I had mentioned before in the first chapter, that simplified tax formula. We're going to get a little bit more complex with it. We're going to add some features to it. Ultimately, it's the same calculation. It's just that we're kind of inserting some additional calculation. Because, I mean, you think about that 1040 form, it's got a lot of lines on it. Right? It doesn't just have the 5 lines on it like our simplified tax formula. It's got a lot of lines on it. So we're going to add, we're going to get a little bit more complex with that here in the first learning objective. We're also going to talk about filing status. So you saw in those chapter 1 problems, the tax returns, some of the problems there, we used single filing status, and they told you what the filing status was. Or married filing jointly. We're going to talk about the different filing statuses. And they're actually kind of unfair in that first chapter because you have a homework problem that asks about filing status as well. I think it was in chapter 1. And we don't really even go over it until chapter 2. So that's kind of in the wrong place. Then we're going to talk about dependence, what a dependent is on a tax return and what exactly that means, and how do we determine whether somebody is a dependent or not. We're also going to talk about that standard deduction. That's pretty easy. You guys have already done that. You know exactly where to find it, but we'll just kind of review that concept a little bit. The amount of tax due to the IRS, again, you've already done that. You did those calculations. You've done them in your chapter 1 homework, and we've done them here. So that's just kind of getting a little bit more I don't even know if it gets all that more complex, but using the same formulas that we've used before in order to calculate that tax due. And then we'll end up talking about those interest and penalties that I had mentioned. We talked about the interest and the penalties for preparers. These are interest and penalties for taxpayers and when we apply those. So let's get started here. Talking about and I left the, okay, so this was our simplified formula here. Income minus our permitted deductions. So in our case right now, we were talking about the standard deduction. To arrive at our taxable income, multiply that by the appropriate tax rate to get our tax liability. Then we would subtract any tax payments that have already been made or certain tax credits. We haven't talked about tax credits really in detail yet, mostly focused on those tax payments, but that's the amount that was withheld from paychecks that shows up on the W-2 form to arrive at our tax refund or the amount that's tax due. So this is our simplified formula that you're already familiar with. Now, we're going to change a couple of things here. We're going to start, so up here we started with just our income, our total income. We're going to change the terminology a little bit and call it our gross income. So the total amount of income, and if you look at the form 1040, you see that we've got all sorts of different types of income. We've got our wage income, we've got interest income, we've got dividend income, we've got Social Security benefit income, all sorts of different types of income that would then be included in our gross income amount. So this is just the total amount, total income or gross income. Okay, so we'll start there with gross or total income. Okay, oops, I don't need that line. Then we're going to subtract our permitted deductions from gross income. Remember I had mentioned before we have a couple different types of deductions, and they show up in two different places on the tax return. We've got one type of deduction that shows up on the Schedule 1, and I showed you when we I know it was a week ago, but I showed you a week ago that Schedule 1 has 2 pages to it. First page is income, other income items, and then the second page is what we call adjustments to income. So this second type of permitted deductions from gross income, these are our adjustments. So we subtract those. Permitted deductions from gross income. All right. Now, these are otherwise known as adjustments, and they show up on Schedule 1, page 2. So they have their own form, or their own part of a form, where those show up. But they're called adjustments, okay? So, but it's a type of deduction, so it's a subtraction. This is a subtotal then, and we arrive at adjusted, so there's that word, adjusted, adjustments, gross income. AGI. Now, if you recall, let's see if they have a form here. Yeah, they do. There's a line here. So our total income, this is line 9, goes there. Our permitted adjustments, line 10. And then our adjusted gross income is line 11. Now, why do we need this subtitle, or this subtotal? Sorry, not subtitle. Why do we need this subtotal here, this adjusted gross income? We need it because there are a lot of items elsewhere on the tax return that are dependent on what this number is. So they allow you to have this special classification of deductions that reduces your gross income to adjust it, to arrive at this adjusted gross income number. And there are several items on the tax return that you may get that credit or deduction depending upon what this amount is. Things like the child tax credit. Things like certain itemized deductions. It is a lot of things flow from what this number is. And it's this concept of AGI. I'm going to continue with the rest of this. So from AGI, we then subtract standard deduction or itemized deductions. That shows up on line 12. Now, we're mostly right now, we're just going to focus on the standard deduction. Chapter 5, we're going to talk in detail about itemized deductions. But right now, we're just focusing on the standard deduction. But know that it could be the standard deduction or it could be the itemized deductions. It's going to be whichever is higher, whichever is more, because that gives you the largest tax benefit. So that shows up on line 12. To get to our taxable income. And that's line 15. Now, you'll see we got line 12, we've got line 13, which we're going to talk about that. That's a different type of deduction that is related to business income. We'll talk about that in chapter 6. And And if we were entitled to that additional deduction, we would add then lines 12 and 13 together. That's line 14. So that's why we're kind of skipping over 13 and 14 here. But there's line 15 for our taxable income. Times our appropriate rates, tax rates, equals our tax liability minus tax credits so again, tax liability is on line 16. Tax credits show up in a lot of different places. We need to subtract. That makes it a positive. Tax credits like line, let's see. Schedule 2 is a type of, has tax credits on it. Line 19 is a type of credit. Schedule 3 has certain credits on it as well. So this is going to be, these are going to be anywhere from lines 17 through 22, those credits. Plus other taxes. What we're referring to here is mostly self-employment taxes. You remember those from payroll accounting? So if you're a self-employed individual, you have to pay your own Social Security and Medicare taxes. That gets calculated on the tax return. But line 23 is other taxes, including self-employment tax. There are other types of taxes as well, but for our purposes, we're mostly going to focus on the self-employment tax. But this is line 23. Minus our tax payments and refundable credits. Sorry, this is a squeaky. Remember I told you there were a couple different types of credits? There are refundable credits, there are non-refundable credits. Non-refundable credits can't bring your total tax liability below zero. Refundable credits, though, act as just like payments, as though you paid cash. Those can bring your taxes down below zero so that you get a refund even if you didn't have a tax liability. So these show up on lines 25 through 33. To get our refund or tax due. Which would be a negative or tax due. Which again is going to show up. If it's a refund, it's 34 and 35. If it's tax due, it's going to be on line 37. So what we did here, we added a couple of new items. So we expanded, remember we went from total income minus our deductions to get to our taxable income. Now we've got two separate types of deductions. We've got our deductions called adjustments, which show up on Schedule 1. That's Chapter 4, by the way. We're going to focus on the adjustments in Chapter 4. To arrive at then our adjusted gross income. This is an important concept because adjusted gross income, determining adjusted gross income determines other credits and deductions and income items elsewhere on the tax return. So this is an important number, this adjusted gross income. subtracting the standard deduction or itemized deductions to arrive then at our taxable income. We've done this. Multiplied by the tax rates, we've already done that calculation to arrive at our tax liability. Then we subtract credits, add other taxes, so any other taxes that we might have, we've got to add that in, and subtract payments that we've already made, so through withholding, and any refundable credits, which act as payments. Again, so the credits, we focus on that in, I think it's chapter 9 for the credits, to arrive at our refund or tax due. Again, it's just following the tax form. It's the same format as the tax form. That Schedule 1, additional income and adjustments to income that I showed you this last week, but I'll show it to you again. So the first page are additional items of income. All of that, if we had additional income, would be included up here. All of our income is going to be up here. Okay, all of our income is going to be in that number. Additional types of income, all that line 10, it gets summed there. Line 10 then gets transferred over to the first page of the 1040. These are our adjustments to income, where I said adjustments, Schedule 1, page 2, right here, page 2 of Schedule 1. These are the items that reduce our gross income to arrive at adjusted gross income. They're just showing you some of the different schedules that they reference there. So Schedule 2 is for additional taxes that might be paid. So all of this goes into line 23, gets transferred to line 23, and you would see that as well. Let's see. That's page 2. Other taxes, again, look at all the different types of taxes you could be subject to. So all of this is added up. These are your total other taxes. Enter it here. And on Form 1040, line 23. Line 23. Right here. So those other taxes would get totaled and added onto there. Don't worry about the intricacies of it right now. I'm just showing you generally where all of it flows through to. Additional credits and payments as well. And then they've got this guide for you that, like, what is it? So where all of this stuff shows up, on what chapter we talk about it in, and then what line it goes on the tax form, on the 1040. Okay, so kind of like a quick reference. I'm not going to go through all that detail. Okay, so this explains that adjusted gross income concept. So the calculation of AGI, as it says here, it's simple. Subtract all of the 4 AGI deductions from our total income. So what we have are 2 different types. These are adjustments. We also call this 4, I'm running out of room here, 4 AGI. And these are from AGI. So these are deductions for AGI. These are deductions from AGI. 4, think of B4. These come before AGI. We calculate AGI. These come from AGI, so we've already calculated AGI. We're going to subtract it from AGI. There's also this concept of above the line and below the line. I don't know if they talk about it here. They used to talk about it here. It's terminology that's used frequently in tax. Above the line deductions are these deductions, the 4 AGI deductions. Below the line deductions are the from AGI deductions, so they come after. AGI is the line. So it's either above the line or below the line, and whether or not a deduction is above or below the line will, like I said, affect other items, other credits and deductions that show up in other places on the tax return. You're going to see that, and I'll point it out when we get to those other types of deductions and credits. Okay, I'll point out, hey, remember when I said the above the line and below the line and for AGI? That's what it's referring to. So you subtract all the for AGI deductions on line 10. Here we go. Line 10 are adjustments for AGI. So these are the deductions that a taxpayer can take prior to calculating AGI. It's an important concept. Many deductions and credits are determined with reference to it. When a taxpayer's AGI exceeds certain levels, certain tax benefits are reduced or eliminated. So, and we talk about AGI throughout the course. All right. Questions about that formula? It's more complex.